All right. I think we're good. Looks like we're recording. Okay, good. Okay, so welcome in everyone. Today is June 2nd. We've just opened a new month of trading. When we look at the charts and look at the monthly chart, you'll see we just started a new monthly candle, or we will on the Sunday opening anyway. We will just go ahead and get right into it. So we'll start with the economic calendar, and then we'll cover the dollar and indices as usual. And if you have any questions along the way, feel free to chime in. Let me pull up. There we go. Okay. Starting with the economic calendar, you'll note that it is the first week of the month, of the new month of June. So typically the first Friday of the month you have non-farm payroll, and you will see here that we do have non-farm payroll here on Friday, June 7th. It's a pretty jam-packed economic calendar this week. A lot of times this can lead to seek and destroy in low probability conditions. So you just want to be cautious of the fact that we do have red folder news throughout the entirety of the week, Monday, Tuesday, Wednesday, Thursday, and Friday. However, I would like to treat this still as non-farm payroll conditions, given that we do have non-farm payroll on Friday. And so the bulk of the trading would need to be done before the or by the end of the AM session on Wednesday. And typically with non-farm payroll weeks as well, your best opportunities, just given the economic calendar and weekly profiles and these ideas coupled together, works out to be Tuesday, Wednesday, AM session on Wednesday, and then after the non-farm payroll release on Friday. So waiting for the 8:30 news release and waiting at least 15 or 30 minutes after that news release before looking to engage in the market. But you can see we do have red folder news throughout the entirety of the week, some PMIs on Monday, JOLTS job openings on Tuesday, the ADP non-farm employment change Wednesday at 8:15, some more PMI, unemployment claims as usual on Thursday, and then your non-farm payroll on Friday. Okay, so if you're just looking at the economic calendar here, how you normally frame the week, Monday is typically not going to be a trading day because we don't have any data from the week. Since it's the first trading day of the week, we don't have anything to frame a weekly profile, and so I avoid trading on Monday. The one exception for Mondays is on a non-farm payroll week. And so if there is something clear on Monday, like if you see in the London session, for example, price draw down into a 1 hour or greater point of interest, so like a order block or a fair value gap, or whatever PDRA you like to utilize to frame your setups, and you had a clear draw on liquidity higher, then you may be able to frame a trading opportunity on Monday, because with a non-farm payroll week, the bulk of the movement is likely to occur earlier in the week, because as you get closer to that news event, you go into a period of consolidation. So like even though we have 8:30 news, high impact news on Thursday, and this would usually set up for a good trading day, because we have non-farm payroll on Friday, which is a very high impact news event, and not one that anyone should be in a trade in advance of, Thursday can be a consolidative day ahead of that, and that makes Thursday a lower probability trading day. And so just based on the economic calendar here, if we're avoiding Monday and avoiding Thursday, the only opportunities then become Tuesday, Wednesday AM session, and then Friday after the non-farm payroll release. Any questions here? Sufin, good morning. Aiden, good morning. No questions. That makes sense to everyone. Economic calendar. Perfect sense. Douglas, good stuff. Okay. All right, then we will go ahead and move over into the chart. Sufin, clear. Good. Okay. Then let's go ahead and look at the dollar. Okay, so DXY will be opening a new monthly candle. So this was our May candle. We ended up closing all the way back down just above the opening price from the prior month. So you did see we had a nice immediate rebalance here, but there hasn't really been any effort to expand away after reaching into this candle's high and open here on the monthly. And so I would like to go into June with still the expectation of lower prices and reaching towards sell side, just like we've been talking about for the last 2 to 3 weeks or so now. If you drop down into your weekly chart, you can see that we're still trading nicely below this imbalance right here, which we traded and closed through here, reached right back up into the high end, and then utilized the consequent encroachment there, and then utilized the low end here and here, all to continue expanding lower. Even though we've traded above some discount arrays on the lower time frames, from a weekly perspective, we are still trading below this array down here and not showing any effort to expand higher. So if we're showing an unwillingness to gravitate back up into the range, the likelihood is that we can continue drawing down towards sell side liquidity. Dropping down to the daily chart, you can also see that more sell side liquidity has been engineered here in the form of these relative equal lows from Tuesday and Friday of the last week, and we did close back below the imbalance here as well after running out the buy side liquidity here. So the damage has already been done on the buy side, and I'd like to see if we can make a move either earlier in the week or if we just end up in consolidation on the non-farm payroll release to reach down into the sell side below here. And of course below there we have another swing low and then our larger sell side objective, which is resting below the lows from April. Okay. I would remain bearish on the dollar and look for sell side liquidity until there is an effort to get back above this SIBI and ideally create some level of displacement back through this high. So not just trade above it, but actually trade above and create a new imbalance in doing so. And I'd want to see candle bodies closing above that high as well. You can see how right here when we ran that high, we did run above it, but there's no candle bodies closing above that high. It's just right at the high and then we draw immediately back lower. Any questions here on the dollar? All good. Douglas, all good. Aiden, all good. Okay, sweet. Then let's move over to the indices. I'll start with ES. On a monthly chart, okay, starting just from our highest time frame here, we've been continuing to expand higher. We're trading near all-time highs as well, and closing nicely in the upper portion of the previous range here. And we did already trade right back up through that that opening price there as well. Okay, so I just want to see how we respond within this range now. And given the closure of May's candle, I would likely expect for June to continue gravitating higher. Remember, we're working within the seasonal tendency as well of May through November being the distribution of the yearly range. And we're in an election year as well where we can likely anticipate significant rallies to occur. And so it makes sense for June to continue gravitating higher, back above May's high, also in sync with the likelihood of dollar trading lower. Because remember, we're looking for that inverse relationship. If dollar is going to gravitate lower, ideally we see indices go higher. So just starting on a monthly chart, the clearest draw going into June, and where I would expect just that very next candle to trade is to look up toward May's high. That is typically the simplest way of going through your higher time frame bias on a monthly or weekly basis. You just want to look at when we open the next candle, What are the highs and lows of the previous candle? Which are we closer to? Well, if we're closer to one than the other, and we're not reaching into some kind of array that's likely to cause a reversal, then the likelihood is we gravitate to the one that we're closer to and the direction that we've been moving in. So since we've been moving higher, and when we open here on June's candle, we'll likely be a lot closer to the high than the low. That opens up the greater likelihood that we would trade into the high. So that can become the monthly bias. All right. On the weekly, we did have a nice draw back down into some discount arrays this week with that classic expansion profile, Tuesday making the high week and drawing down all the way throughout the week into Friday. But you can see that with the rally back up in the PM session on Friday, we did end up closing this weekly candle above the imbalance that we drew down into here, and also this higher imbalance as well. Okay, so really bullish close on Friday, and we could see that continue a move back up into the previous week's high here. So initially going into this upcoming week, I would be looking for this weekly high as a draw on liquidity. Okay. And then looking at the daily, you can see that not only did we go and close above the imbalances that we traded into, but we also closed above the SIBI right here. So if I mark out the high end of that, you can see how we did close above the high end, which is good for supporting continued bullish prices. Okay. So we'll just want to see if early in the week on Monday or Tuesday, is there an effort to draw down into some kind of array down here? And if so, is there continued displacement to the upside? I'd be watching for that on the 4-hour and 1-hour charts. Because of the fact that it will be Monday and we don't have any data to really work with ahead of that, I would likely not be looking for a trading opportunity on Monday. But if there was something to present, it would be a retracement down into a discount array within here, and then a movement up into higher prices. And then on Tuesday and Wednesday, I would be looking for the same thing. Some return into a discount array and continuing toward higher prices. And you just have to be mindful of the economic calendar, of course, because as we get into the PM session on Wednesday and then Thursday's trading, the likelihood is that we begin to consolidate ahead of non-farm payroll on Friday. So just being cautious of that. But as long as we remain above this low now, I'll likely continue to look for higher prices on the indices. We did enough damage in this run down to go and seek the buy side again. You can see that we traded into the higher time frame imbalance, and we also ran below a swing low here. So that presents a nice stop run opportunity, and the greatest rallies are going to occur after a stop run takes place. Just like here, you can see buy side is run out, and then we draw lower. Sell side is run out, and then we draw higher. You always want to see some form of manipulation taking place for really high probability opportunities. Okay. So just looking for higher prices here on ES still. Ron John still unable to make sense of the huge run in the last 30 minutes on Friday. Is it due to the monthly close? Yeah, it can be a result of the monthly close. It's also, if you're just thinking about an open, low, high close, we've been bullish overall. And if you have a week down here where we've run significantly lower throughout the course of the week and then down into Friday, it makes sense to then run the end of the week against anyone who's been able to be profitable on that week. So anyone who's been in profit has been short from Tuesday, Wednesday, or Thursday. And so if you reach down into a higher time frame PD array and run the sell side liquidity here, then it makes sense to start doing that purge and revert idea, which is where you're running into an important PD array and then you're looking for price to run back against the prior 3 days highs. So here, here, and here. That's why this becomes the objective to reach for. And you can see that as soon as we ran sell side, the damage was done down there. So then we can return back into the range. This was a pretty significant rally and not necessarily expected to be that significant, but that's the framework behind the idea. And if you go down into your lower time frames, you can see that when we do run sell side liquidity out below here and then trade into this imbalance, you can start looking at, are we making an effort to displace? So you see the candle draws below, but look at the candle bodies, nicely respecting that high end. And then if you go down to your 30-minute chart, displacement higher, consolidation, and continued expansion up into the range. And then just seeking the AM session highs. Something to note as well is if you go into your charts, take a look at on your own charts and look at ES versus NASDAQ and YM. And if you look at YM, the Dow, this low was never even run on the Dow. So you have a really significant SMT, and you'll see that before this rally really launched off, the Dow actually traded back through its AM session highs. Okay. So multiple things pointing toward a potential end-of-day rally here. Not necessarily something this significant, but you can see there was a real effort to run back on the AM session highs and then up toward the relative equal highs up here as well. And then just redelivering the daily SIBI. So as we trade back up into the SIBI, your objectives would be Thursday's high, which is the low end of that imbalance, the midpoint, and the high end. Axel ICT says it can retrace more than 30. Yeah, absolutely. If you're looking for that TGIF framework and the close of the week, it can be typically that 20 to 30%, but as much as 40 to 50%. So this gives the framework for the week. Tuesday was the high week, classic expansion. So Wednesday and Thursday expecting continuation to reach for the higher time frame objective. And then in this case, Friday does extend lower to reach into it, and then you have that return into the range. Any other questions here on ES? Aiden, all good? John, one thing I can't wrap my head around is if I'm on the 4 hour, should I keep only daily fair value gaps or weekly fair value gaps too? You always want to be working from the highest time frame point of interest, because a weekly is going to be superior to a daily in the sense that if there is a higher time frame imbalance below that is likely to be gravitated into, I'm not going to be using a lower time frame imbalance to judge a likely turning point. So like if you look at your weekly chart, we do have a weekly imbalance right here if I mark that out. But if we're going to trade through that and not show an effort to continue displacing higher, and I see that there's a higher time frame imbalance below being the weekly right here, any lower time frame imbalance within this range, within here up to here, anything within here, I'm not going to be expecting to support a price move higher. Okay, so if you go down to your lower time frame, see what's within this range, you have an imbalance within here, and we just draw through it down to the higher time frame imbalance, which is the weekly. So if I had a daily imbalance, for example, and then a weekly imbalance that's resting right below it, my focus is going to be on the highest time frame one. You still want to watch the lower time frame one as well to see if there's an effort to displace away from it. But if there's no effort to displace away, the likelihood is that you're going to gravitate into the superior time frame, which is the higher time frame one. And that works across all time frames. So like a 15-minute would be inferior to an hourly, which would be inferior to a 4 hour versus a daily versus a weekly. Stuart, could we just consolidate all week based on last week's large expansion? It's a possibility, you know, with the economic calendar having some consolidation ahead of Friday's news. I don't think there's necessarily a need to consolidate for the entirety of the week. You can see that we did have this here as a failure swing on the high up here. So In a sense, you do have low resistance liquidity opportunity here. Also, throughout this range, there's really not a whole lot of imbalance because we traded high, lower, higher, lower, higher. There's just one imbalance right there, lower, higher, and we've already traded through this imbalance here. So really, this area here has mostly been delivered efficiently, except for this little imbalance right here. And then all that exists above here is a SIBI here and then buy side. So I would expect that this portion of the range could likely be cut through pretty easily. As soon as we can gravitate up through the imbalance that exists right here, which is the last in the range, we should be able to work nicely up toward the buy side. And you can see right here, we've already had a change in the state of delivery after trading down into the weekly MISI. So on your 4-hour chart, you can see last down close candle here and displacing nicely through it. So early in the week, I'd really be looking for, is there an effort to consolidate here and form an imbalance here and then draw down into it to continue expanding higher? Well, John, how do you pick that portion you have highlighted? I'm just looking at the full range that we've traded already. So let me just I'll take that off right there. This is the range up toward the objective that we haven't traded. And then I'm just looking what exists within this range. Is there any area that has not been delivered efficiently? If you look at price right here, and this is the draw on liquidity, that's why I have that high marked. Here we've delivered up, down, up, down, up, down, up, back to that low. And we've already delivered the buy side back through all of this area, which was delivering sell side liquidity. Okay. So now the only imbalance that exists within here is this range in terms of sell side liquidity. That's why I'd be watching for, is there an imbalance likely to form in here? If the next candle consolidates, then you would have a BISI down in here, which price could draw into. Come on. Let's say we consolidate, and then you can draw into that imbalance and trade higher, like that. Okay. And if you look within this range right here, the only area where you can identify imbalance within this range is here. So this has all been delivered efficiently already. And so there's not really reason to slow down through this area because it's already been efficiently delivered. So I would want to see this get sliced through. There's a unicorn setup with breaker on the 4-hour if fair value gap forms on Monday. Yeah, so if you utilize that as your framework, then that can become your higher time frame point of interest. And if price draws into it, that's where you can look for a potential reversal to take place. And then you couple that with your weekly profile and daily profile and build a trade framework around that. So good thought there. Cool. Let's take a look at NASDAQ. Monthly candle did not close above the prior candle's high, but you can see we are trading back above the opening price from the down move right here as well. It's hard to really identify if you would treat on a monthly a down close like this as a bullish shorter block. I really wouldn't at this point because it's the highest down close that we formed across all-time highs. So just like ICT says, when you create a down close candle after running highs, you don't want to then go and trust that as a bullish shorter block. So I wouldn't look at this necessarily as one, but we could identify on lower time frames, of course, down close candles that should support a continued price move. So in June, as we open that candle, same idea. As long as we open up in this range, we'll be in closer proximity to the buy side here. So initial objectives to look for are just going to be the midpoint of the wick right here, and then buy side above the high. On a weekly, we did fall just shy of trading into this imbalance down there, and you can see ES had a much nicer close than NASDAQ did. We did trade and close in the upper portion of the imbalance, which is still nicely bullish on NASDAQ, but I would be more interested in a deeper retracement on NASDAQ if there's not an effort to continue displacing higher. ES is pretty clearly aligned with reaching back up toward the buy side. NASDAQ could see a little bit more of a period of consolidation, and it's not showing quite the same bullish intent that ES is. But if you do look on your daily chart, you can see that when we did trade down into the low end of the weekly imbalance and also fully redelivered all the imbalance here on the daily through this area and through the lower imbalance right here, we did trade into just the upper portion of the wick right here, and then we closed above sell side liquidity. So that's your swing low, and you can see how we did close above. Now on NASDAQ, there is imbalance that exists above the SIBI here and here. So initially, as we go into the week on NASDAQ, this would just become my draw on liquidity. This imbalance here, and if we continue to extend higher up into here. So this would be my first objective. ES has already traded up through those premium arrays, and so I can look for ES to gravitate back into buy side. But for NASDAQ, we've just run external liquidity, and so before reaching to the buy side and external liquidity on the opposing end of the range, we need to look at the midpoint of this range and any inefficiency that exists as internal liquidity as the first objectives. So if you take your external liquidity up here, down to the low, you can see we already reached back up toward the midpoint, but you can see what premium arrays exist inside of or above equilibrium of the range. And you're going to have this SIBI and this SIBI here. So I'd like to see price gravitate back up above this high into this imbalance. Okay. And then I'll be watching, is there an effort to continue expanding and close through these premium arrays? If so, then we can gravitate up toward the buy side. If not, then we could see a continued period of consolidation occur. Okay. Any questions here on NASDAQ? Or dollar or ES? Any analysis questions here? Douglas, sounds good. Do you agree? Good to see you in here. Looks like we're all good. I don't see any other questions. So if we have any at the end, feel free to put them in the comments. Otherwise, that will conclude that portion. I'll go ahead and go into the trade submissions. It looks like I just have one from Aiden, so I will go ahead and cover that. All right. Okay, so we got the trade submissions in here. Again, y'all, if you want to have any trades reviewed from the week, whether it's a win or a loss, either way, there's something to learn from it. So this is a great place to share those and help the community learn. In trade submissions right here, you just find the current week, and I'll open up a new one for the week ahead. And then here's the template that you want to use for making your submission. Just make sure to include the framework, your markup, so your screenshots of it, and then your journal entry, which includes all of these details. Okay. All right, here's Aiden's trade from the week. It looks like it was on Thursday, I want to say. Is that Thursday? Yeah, looks like Thursday's trading. Concepts used: change in state delivery, breaker, SIBI, price swing grading, and optimal trade entry. And the model was a market maker sell model in confluence with the silver bullet. Trading the micro very good. I'm happy to see you trading that micro, Aiden. I think that's going to be a good switch for you, and it looks like you're working with a larger range as your stop loss as well. So good work there. Time frame, 15-minute framework, 5-minute execution. Trade lasted 20 minutes. Traded 3 micros. Entered at 10:20, partial at 10:35, and exited at 10:40. So inside that silver bullet window, 10 to 11 a.m. Eastern time. Liquidity purge first was the 8:30 a.m. highs, and then the original consolidation low was the draw. 1 partial, 31 handle stop, and you went break even, looks like, after taking your first partial. Bearish bias. Emotions before entry. The trade was a clear market maker sell model on the 5-minute. 2022 model confluence occurred at 25% of the price swing. Buy side of the curve with the smart money reversal at the optimal trade entry of the Asian range sell-off. Emotions after entry. No emotions is a textbook market maker model with the second stage reaccumulating at 50% of the buy side of the curve within fair value. Enter with 3 micros since I'd have to adhere to more handles to place my stop loss. That is a good thing, and that is really beneficial. Actually, I was talking about that in the lounge on Friday. Working with a wider stop and a higher time frame framework and just trading less size is going to be so beneficial to everyone. It's going to help you avoid over trading because you're working with a larger range. You're going to have fewer opportunities throughout the day, and it's going to keep you focused on higher quality setups, and it's going to ease your emotions because every little price fluctuation isn't going to be such a wild swing in your P&L. And then on top of that, it's going to help you stay in trades longer as well. So working from a higher time frame with a larger framework will help you stay in those trades for if you want to capture the a larger portion of the daily range, whether it's the entirety of the New York AM session range or whether you're looking to actually day trade and hold into the close of day for an expansion day. But HINDSIGHT entering with micros does help ease the edge compared to using minis. So very good reflection there. Emotions after partial. Felt this was an appropriate area for a partial since this was where a low was formed between 9:30 and 10:30. The initial balance. Took 2 micros off at the initial balance low and left 1 runner for a scratch to the draw on liquidity. Good stuff. Pleased to see my full terminus being hit with taking a larger than normal trade. Along with taking a larger normal trade than I'm used to. Yeah, good stuff. So working from that higher range can help you be in a larger range trade as well. Here's the framework. This was the Tuesday high week up here, Wednesday expansion, and expecting Thursday expansion down toward that draw on liquidity down here, which was the weekly BISI below. I like that you participated on Thursday when there was a clear weekly profile and draw on liquidity. You're using that 4-hour SIBI as your higher time frame point of interest here, traded right up into the consequent encroachment of it. Very nice. And then, let's see, that was occurring in here. You also saw it as optimal trade entry of this larger range. So recognizing that we're up in a premium and in premium arrays. And then we displaced lower. We're making an effort to draw lower here. And then your entry was on the 5-minute chart, it looks like. So recognizing that this is a market maker sell model, which we can expect will take place anytime that we're trading up into an imbalance like this and then reaching back for the swing low that was established before that, this is going to present a market maker sell model. So that's what Aiden's looking at right here. We trade back below the equilibrium of the range using this as an implied dealing range and then identifying that sell opportunity in the SIBI right here, and your stop placement is great. Just back above the swing high right here and treating this as a bearish order block as well, since we are expecting continued expansion to the downside. I like it. I don't really have a lot of commentary to give in terms of the analysis here. I think you had a really nice framework. Partials at good places. Not expecting price to draw all the way down to the sell side with the first partial, which is great. Always making sure to pay yourself there, and you can avoid a larger, having to sit through a larger retracement if that happens before reaching into the sell side, and then holding something for your terminus. So I think you nailed it in terms of the trade, Aiden, and I think it's really great to see you make that switch to trading micros here, and I'm happy that you found the reflection that it reduced your emotions. Very good. Very good stuff. All right. Well, that is all I have for today. Are there any other questions? We can go over anything else that you have questions or commentary about too. If you want to hop on the mic or just put a comment in the chat, I'll give a couple of minutes for that if there's any other questions. Otherwise, that will pretty much conclude the call here. We've got a busy week ahead with the economic calendar, so just be cautious going into this week. It's a bit of a, there's a lot of landmines throughout the week, news Monday through Friday, every single day, red folder news. So be cautious of that. Make sure you're focusing on giving opportunity for the weekly profile to develop so you can have an understanding of where price is likely to work toward. And then, of course, no participation going into the non-farm payroll release. That's an instant repricing event. It'll jump right over your stop loss. There's no appropriate way of managing risk around it from an intraday trading basis. And so wait at least 15 to 30 minutes after the news release comes out. And then you can find opportunity to be a participant after that, especially if the draw on liquidity hasn't been met yet. Do you agree? I see you typing. Is there a likely weekly profile to refer to on weeks with news all 5 days? Not necessarily. The likelihood with news every day and news being non-farm payroll on Friday is that you could see some sort of seek and destroy profile. So watching for the first few days of the week and seeing how those develop. Are you having highs and lows? Like, does Monday form and then Tuesday runs the high and low and then Wednesday runs the high and low of Tuesday as well? If so, that's a seek and destroy profile and you want to just avoid that. Then after the news on Friday, you may be able to find some expansion taking place after manipulation with the NFP release. Otherwise, you just want to be watching throughout each day and seeing how that weekly profile develops. So watch Monday's trading and see how does Monday's range get treated. Do we trade back below the low of Monday and make an effort to form a Tuesday or Wednesday low a week? Or do we just sit in consolidation through Wednesday and then on Thursday purge the higher low a week? That's when we can start looking for the weekly profile to develop. But initially going to this week, just based on the economic calendar, my expectations for trading days are I personally would only look to be a participant on Tuesday, Wednesday's AM session, and Friday after the non-farm payroll release. And I would not trade on Monday or Thursday. Good. Very good. Any other questions from today's session? All good, Aiden? All right, good. Then we'll go ahead and close it up. We do have our next session of the 2022 study group tomorrow at 8 p.m. So I look forward to seeing y'all then. We'll be going, I think this week we're actually taking a look at just a couple of trading recordings. Let me take a look. Schedule. June 3rd. Yeah, so we're going over episode 14 and 15, which are both live trade executions tomorrow. So we'll have a discussion on that, and then we'll just look at some examples of 2022 models throughout the past week and answer any other questions as well. So excited for that tomorrow. Those have been really good discussions. Last week was super insightful as well. If you weren't able to be a participant, go back and watch the session recording of that. It's posted in the Discord and on YouTube as well. And otherwise, I'm going to go ahead and close it up here. If you have any other questions throughout the day, I'll be around for just a little bit, so feel free to send me a message or post it in the chat. Otherwise, be safe, be responsible this week, and I will see you tomorrow. Take care, everyone. Enjoy your Sunday.